There are different rules for when a person first comes into averaging. There are transitional rules when they're in their year 1, 2, 3 and 4. So
G'day, Paul from Small Crown Productions here, and welcome to the Business of Art. On this channel, I dig into all of the things that we need to help us build a business around our creative work. So tips, tools, strategies, interviews, mindset, whatever I can do to help share knowledge from people who know what they're talking about so that we can do business better and make money from our creative work. So if that is something you are interested in, please consider subscribing. This video is one in a series of over 15 videos relating to tax and finance for creative people in Australia. So this is specific to Australia. It is also general advice. Always, always, always seek specific advice about your situation in your region or country where you are. What I did was ask my creative network for a question that they would love to ask a tax and finance specialist, and then I bundled them all up and took them to Matt Tucker, the principal of Creative Crunches here in Brisbane. Creative Crunches is an arts-focused accountancy firm. They know what they're talking about when it comes to Australian tax law, tax and finance for creative people. But again, general advice. Always seek specific advice to your situation. Matt was super generous to donate his time. I cannot thank him enough for taking the time out of his day to actually sit and answer these questions for us all. So with that, let's dive in to today's question.
the thing with income averaging, it's great, but it's complicated.
Right.
So
This is all
to try to
general advice. Seek professional advice
look,
your situation.
yeah, with this area, absolutely, it's one of those that it just needs to be. I mean, look, the information is available for people who want to go down that rabbit hole, but they're walking into a very complex area. When we take on clients that have, not seen a specialist before, almost 100 times out of 100, they have not been averaged where they've been eligible for it, and that's because the agent hasn't even known about it. It's just one of these provisions that unless you're working in the industry, you really wouldn't know about it. Just the same way that for us, we're not property developers, and you need almost a separate degree to know all of the ins and outs of property development when it comes to tax and GST. There are just areas of tax law which are very specific. So averaging in broad terms it's a great little system. Not all arts workers are eligible for it. The nature of who is generally able to get into that system are the people who are writers, authors, artists, generally the ones that are producing artistic works for which they usually hold all the copyright themselves. People involved in film and television are a specific sort of subset. Sports people are involved as well. But there's a category of people in the arts that are eligible to be in averaging. So the first thing is to get solid advice around your eligibility. So one quick example, film and TV, it's quite broad for film and TV practitioners. Very common for TV presenters to start their career as journalists. Reporters in the background. They're not in front of camera. They do all of the work behind the scenes, and they're a journo. There's a point at which they're tapped on the shoulder. They start getting in front of crosses. They might be out in the field reporting. Graduates, maybe to being an anchor. Now, as soon as you're in front of the camera, that's TV presenting. TV presenting, different ball game. Journos out. TV presenters in. So you can have a person that's ostensibly in the creative space, but they may move from not being eligible for this provision to being eligible. They might straddle for a few years where they're doing both. And the question then is like, oh goodness, you're probably under one common contract. What does this contract have to say? Is there anywhere where it's specifically saying that you are a presenter? We need as much supporting evidence as possible that you are moving away from journalism to presenting. So they might be straddling something for a couple of years where some of what they do is averageable and some is not. So it can get complicated quickly, but if it's a given that you're a person who's in that system and you're eligible now, what it seeks to do as a set of rules is try to streamline the peaks and troughs that are very common to the industry. So all of us are taxed along the marginal tax bracket system. So in years where we earn a lot, we get taxed a lot. For most people, as they're going through their career, they're gradually stepping up and they gradually pay more, but they're earning more. And once they're at that level, they don't tend to go backwards. So they might pay a lot of tax in one year, but they're going to be at that same level next year. And they'll also pay a lot of tax next year. It doesn't actually suddenly just go back down. But in the arts, that can be different. And so if you look at a person taxed over a 5-year period, with the marginal bracket system the way it is, if they're on lower incomes in some years and they are paying lower tax like everyone else, that's fine. But then there's a spike year, which they do really well, and suddenly they're paying heaps. Now, the way it kind of looks over a rolling 5-year period is that if you look at the total amount of tax that they've paid over the 5 years, including the large one, and look at that as a dollar figure across the amount of income that they earned over that whole period of time, you start to see that they're getting taxed proportionately higher than what another person who's just being taxed standard across those rates is, because that person is gradually climbing, their income is climbing, their tax is climbing, but the income is as well. And as a proportion, it is moving, I guess, consistently. So the averaging provisions try to provide a mechanism, because those fundamental tax brackets are still the same for people. That doesn't change just because you're in the arts. But what averaging says is if you're one of these practitioners, then we think you're predisposed to the peaks and troughs. So what we're going to do is try to take more of a kind of rolling 5-year type of approach to your taxation. And they do that by, let's fast forward 5 years where we've got an actual history, because there are different rules for when a person first comes into averaging. There are transitional rules when they're in their year 1, 2, 3, and 4. So we've gone through all of that, and we're in year number 5. So let's say that year number 5 is one of these really great years where everything's come to fruition. You're on a much higher tax bracket than normal. They're looking at your income in year number 5 and they're comparing it with what the average is from your averaged income over the previous 4 years. And in those previous 4 years, there's could be little mini peaks and troughs as well. So what they're really trying to do is say, let's just look at the four years before you, peaks and troughs, and we'll take that average. And now what we're going to do is compare that average with what you've actually reported as income this year. So the provisions will have a benefit when there is enough in the current year spike income that you are being placed into a higher marginal tax bracket than what you would normally be sitting in if your income was more along where that average point is. So they will still tax you. They're still going to, they don't just bring your income back down to the average and say, we're just going to tax you like last year. It's not that generous, but they are saying, if we just taxed you along all of those normal rates right up here, that's going to produce quite a lot. And that would be fine if we knew that you were going to be on that level next year as well, but there's no guarantee of that. Now, if they do happen to be on that level next year as well, what tends to happen is that this rolling 4-year average, it keeps moving with you. So if you start to consistently just post more and more income each year, then your average is also going to start rising. So that spike is going to need to be bigger and bigger, to be moving away. So the way that it works in the broadest terms possible is that if the current year income is enough of a gap from your norm that you're being placed into a different tax bracket, you will find that the mathematics in the calculation will give you some tax relief from what it would be if they just taxed you normally. But it's a function of, are you eligible for it? If you are, is all the income that you're earning from your activity actually eligible or is some of it not? And that's very common. We can have musicians that are earning a gig income, performance, averageable, workshops, creative, averageable, plain teaching, no, just standard, not averageable. Might have interest on their bank accounts. No, it's got nothing to do with it, it's just interest. So it can be a function of how much averageable income you actually have earned. It can be a function of how much income in your overall tax return is related to averaging. Have you got income coming through from part-time, normal, casual work, which has just got nothing to do with averaging and is just normal income? All of that's just still going to be taxed normally. In today's world too, these rules were written a long time ago when all of our tax brackets were really super condensed. So the provisions were written back then. So it was, I guess, comparatively a little bit easier for people back then to get one of those spikes and find themselves in a higher tax bracket, because top marginal tax bracket was kicking in at like $80,000 or so. Yeah. Now that top marginal bracket does not even arrive until 180,000, and they're broadening these tax brackets all the time. We've only just gone through another reassessment of those brackets through COVID, where they've elongated them again. So, you know, you can have people that may have an actual difference in income between about 40,000 and 80,000, which in anyone's book is a massive difference in their annual income, but 40 to 80 is still sitting, you know, within the actual same tax bracket. So it can be very easy for clients to think these provisions are going to give them, you know, just these benefits when I'm just earning more. It's like it's actually a lot more complicated than that. And we've learnt the lesson the hard way over years, where you never second guess those rules, you know, because the moment that you do is one of those cases where there's just some tiny quirk in the mathematics that you haven't thought of at the top of your head, and it's been one of those major mechanisms which has caused the provisions to not really work that well. And it can work the other way, where sometimes it's a pleasant surprise where you think it may not be you know, quite as lucrative, and then everything is plugged in, you do all of the work, and you let the calculation do what it does, and you see the final result, and it's like, that's great. This is going to be one of the good phone calls. Yeah. So you just never know, and it really does keep moving every single year. So it's possible that a client might come in and out of averaging. They might just be doing something one year which is really averageable, and the next they shift out of it. We've had people doing sort of film and TV work where in the context of the industry, they're doing work that's eligible, but then they move into paid employment where some of the skill sets are the same. Most of what they're doing is the same, but it's not technically averageable anymore. And so in their mind, they probably are still eligible because the fundamental nature of what they're doing is similar, but it's just a quirk in those eligibility rules, which I will know when you were here it was, but now that you're out here it's not. And it's really because it's not super designed for other industries. It's designed for us.
There we go. Thanks again to Matt Tucker from Creative Crunches for taking the time to answer these questions. If you have a tax and finance question of your own that you would like to ask, please pop it in the comments below, and I will do everything I can to get that answered, or link you to one of the other videos where it may already have been asked and answered. Also in the description below is a link to the playlist that contains all of these tax and finance questions, so you can dig through there and see if your question has already been answered. And of course, it would be fantastic if you could like this video, subscribe to the channel, but most importantly, if you got something of value out of this, there is a good chance you will know somebody else who can as well. Please share it with them, tag them in the comments, whatever you've got to do, pay it forward so that we can keep helping each other out. Thanks very much. I'll see you on the next one.